Hey guys, welcome back. Drip Coach here with Drip and Farm for a property where we don't trust, we verify, and operate with integrity and transparency. And today we're doing a little different analysis. It's on gold. I do not hold any gold. I don't fault anyone that does. Kudos to you because I think that is a very smart play. But for someone like myself who travels and has nowhere to call quote unquote home, lugging gold through an airport just not super smart. And some of the places that I visit wearing gold may not be smart either. So the $5 wrench attack, or actually in Colombia, it would be like the $5 machete attack, is much more realistic. So I'm not one to wear gold, buy gold, or anything like that. But again, I think it is a great store of value. But the reason I want to bring this up, this is super fascinating. And I guess the more I dive into sound money and, the Ponzi scheme that we've been fed and coming off the gold standard in 1970s, I'm starting to wake more and more up. And first and foremost, it's like, hey, gold's at all-time highs, it's ripping, things look great. But I saw this clip on X and I was like, that is fascinating. Not this clip, this one. So gold breaks inflation adjusted record high from the 80s, first time in 45 years. So this basically means, like, when you account for inflation, meaning the price of gold being up to where it is right now at $3,700, if you account for inflation, it just finally broke past the previous all-time highs in the 1980s. That means if you would have bought gold in the 80s, you've been down in quote unquote gold terms for 45 freaking years. Holy shit. If that doesn't tell you that the system is broken, I don't know what the hell is. That's crazy. You've been waiting 45 years to break even on gold, even though the gold chart looks like this. It's like, oh, that looks great. Let's go out to 30 years. Yeah. So, can you see 40? That'd be interesting. I guess you gotta go all the way out. So yeah, when you look here, yeah, obviously it's down from 1980 all the way to like 1999, but you'd be sitting there going, hey, we're going up in 2000. And then we got the 2008 financial crisis. You would be like, shit, I'm doing great. This is amazing. Look at the price of gold. But all of this is money printing. That's all that this is. That's all that really represents when you look at the other chart here, to look at gold in inflation adjusted prices. That is insane. Like, to me, that is just mind blowing to wrap your head around that and see that. Like, we think of gold as a store of value and this, kind of foundational layer to filter everything across as a hedge against inflation, or just to show the amount of currency debasement that goes on in the system. But just looking at this chart, it's like, damn, that is wild. And we came off the gold standard right around here. And just, yeah, I have no other words for this. I wanted to show this because that to me is just fascinating. And then the other thing that we've been seeing a lot of is let's go with that second. We'll go here. Central banks have been buying up gold over the last couple of years. This article shows you just the highlight of the gold increases in the past 2 years. And Poland with 25%, you got Turkey and India, 13%. But basically, central banks, countries have just been buying up gold. And then I showed you that clip previously where you had French financial advisor and the Russian financial advisor saying, hey, US is going to basically default on their debt, or, inflate away their debt and debase it against gold and Bitcoin, or more specifically Bitcoin. So, or cryptocurrencies is a way that phrased it. But the writing is on the wall that other central banks are like, yo, we need to get the hell out of this entire system or find a way to hedge ourselves. Because if you go back, just a little history for how this all got started. Remember, prior to coming off the gold standard in 1970s, we had the Bretton Woods Agreement, which basically said that, hey, coming out of World War II, looks like the US has most of the gold. So the US is going to peg the dollar to gold, AKA $35 an ounce. And then we will peg our currencies to the dollar. So you had this financial system that was supposed to be built on top of gold. And it was, but it's all handshake agreements, of course. And in 73 or 71, can't remember, but when Nixon made that statement that sounded as though it would be quote unquote temporary, he basically just, reneged, rug pulled on the Bretton Woods Agreement, saying, hey, I know you guys all pegged your currency to the dollar, and we agreed that we would peg the dollar to gold at $35 an ounce, but fuck you, we're out. Not only are we out, you're not getting your money back either. You're not going to be able to get this gold that we owe you. So since then, it's just been a rapid decline. So I say all that to say that, it's taken 40 years for gold to recover and get to new all-time highs. And that's all just due to currency debasement, inflation, money printing. And we're seeing money printing coming right now when the Fed just announced their 25 basis point cut and potentially 2 more by the end of the year. And just that alone, that's also fascinating for me because I'm on the outside looking in now, like very, very chill, low stimulation in regards to what the market's doing. Like I just don't care, but it is fascinating now because of the Raoul Pal thesis of don't fuck this up. It's like I'm so much less phased by market moves. But the reason I bring this up is because with that 25 basis point cut, like it was already priced in. So Bitcoin didn't do much of anything. It kind of it dropped a little bit, then went back up. But the alts have started to rally. That has been fascinating to see. So again, being able to understand like the stuff that Jack Mallers is saying and Raoul Pal and Larry Lepard and Jeff Booth, it's like, okay, now I'm starting to get it. Like by no means do I have their financial acumen with 30, 40 years in macroeconomics or trade in the markets. But like, this was fascinating to watch the money just pile into the alts, like right after the rate cut, for no other reason than the simple fact that, hey, we can borrow money now. We're going to borrow this and short the dollar. Like now I understand what that means. It's like, you're going to give me cheaper rates to borrow money at. Okay, well, I'm going to take that and I'm going to go put it into assets that I think will outperform that borrowing rate. Like that's just mind blowing to me. Like I've heard all these terms and seen them, so to speak, from all the gurus, but now I'm able to watch it play out in real time and my head's not buried in the sand because I'm in some shit cult project, AKA drip. So like I have a nice bag of Bitcoin I'm DCAing every single day. And then I have some alts, and now seeing that we have officially jumped back into altcoin season, right? When we passed over that 75 index, you can look at these alts that are rallying right now. Like BNB got to $1,005 already over yesterday. Solana, so 10%, ETH 4%, 13 for Doge, 16. Like, look at all this green. That is, and they're like double digit green. So wait till we have another rate cut and another rate cut. Like now it starts to make more sense. And I hope it's making sense for you guys. People are just taking the dollars and they're throwing them into other areas like, crypto and other risk on investments. And that is back to Jack Mallers. That's what happened with housing and why it's so damn hard for like millennials to get a house is because the boomers that have assets already and then they can borrow cheap money. It's like, well, I'm just going to go buy me another house and I'll price out whoever, wants to buy this house. It's like, yeah, the house is 200, but I'll pay 250. I got extra money. I can borrow at 0%, 3%, 2%, or the ZERPs and the ZERP knots, as simply Bitcoin said. ZERPs is 0% interest financing. And if you can get that, that means you can borrow money for free. You don't have to pay any interest on it. Like, that's a smart bet. As long as you don't get over leveraged, you buy something that's going to appreciate long term, like real estate, like gold. Why not borrow at 0%? That's super smart. So anyway, I just wanted to share that 45-year lull that we've been sitting on that we finally got to. So shout out to gold, but also hopefully tie together like how all this actually works and how you can see it play out in the market. The smart moves are made before the rate cuts. Like now, again, I understand what it means to say the quote unquote market has priced this in. So I saw this happening before the FOMC meeting. Like the market knew that 25% was coming in, or 0.25%, I'm sorry, 25 basis points, and that it did exactly as expected. And now we have potentially two more coming in October and November, one in October, one in November. So if you want to make money, pay attention to macro, pay attention to TradFi, pay attention to the moves, the writings on the wall, because there is opportunities. And you could definitely, go YOLO into some of these alts, but I would highly recommend, not financial advice, of course, but since I got burned last time, don't go ham throwing darts at the board and go all in on any of these alts, because a lot of these alts are still not past their, okay, maybe not, but many of these have just passed their previous cycle all-time high, and some are still not past. Like, for example, DOGE, I know for a fact is not. Cardano, neither. But that means there's people that, are holding bags from last cycle, like even myself. I have last cycle bags. So if you try to go YOLO in, you could still get dumped on because some people are looking to just get the hell out. They've been holding for 4 years and they're still underwater. So it's like, I'm going to take my bags and run. And of course, some of these will still run much further, but don't go crazy is the best advice I could say. All right, that's all I got. Smash that HBO special, help brother out, like, subscribe, comment down below. And until next time, lift daily and achieve your impossible. See ya.